Hello, Jason here. Today is October 28th, and this is your aftermarket update. So it has been several weeks that we have been dealing with a very choppy market, and I am happy to say that today was the exception. The market has been in sideways trading pattern for a considerable amount of time, but we broke that pattern today. Now, today was not surprising, today was the FOMC meeting minutes and also the crude oil inventory report. So there were two significant events today that were able to light the fire for us as we were into the market. Let's take a look here. I want to show you what I mean by choppy trading weeks. So this is a weekly chart for crude. And what I want to draw your attention to are the red bars that we've had. So these are the recent weeks. 1, 2, 3, 4, 5, 6, 7, 8 weeks here. We've only had these red bars represent the volume and the average, whether it was below the moving average for volume or not. And you can see that with the exception of this week right here, which is still forming, and that's the volume here, it looks like it may be a below average volume week. The majority of these weeks have been red, indicating that volume has been less than stellar. We have seen a trading range as a result of that. You can visually see that we've been sideways here for several weeks. The other thing I want you to draw your attention to here is when this leg down, we did come up and hit the 50% retracement here up at 50.13, and we have since failed off of that level. Down to the low of this week, which was 42.58, and then, of course, we peaked out today at today's high. We'll talk about that here in just a moment. Let's take a look here at your daily chart. This is going to be even easier to see all of the sideways days that we've had to deal with. We came down to the 61.8% range extension yesterday, down here at 42.77. Right, we came down to this 42.77 level. And prior to today, so you'll see that today was one black bar here, which, again, is indicative of volume that was above average. Here we've had 1, 2, 3, 4, 5. Well, let's just go back here a little bit. Sorry about that. Let's just go back. Spread this chart out a little bit. 1, 2, 3, 4, 5, 6, 7, 8 days in a row. Prior to that, you had a few moving days, and then you had several of these below average volume days as well. When you put it on the chart like this, you can see why the market has been choppy and the difficult trading conditions that it has provided over the last couple of weeks. But today, we were able to finally get that big move to the top side. So we did come down, measuring from this swing low to this swing high. We came down to the 61.8% retracement yesterday, and we had this big move up to, as we speak here now, 46.19. That's an important level. Let's take a look here at your monthly chart. This is also going to provide you with some ideas as to why the market has been somewhat choppy and bouncy. This 46.33 level, we've had this chart, this level marked on our chart for many, many, many months. In fact, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 of these months, 8 of which have touched this 46.33 level. So of the past 10 months, 8 of them have touched the 46.33. So again, we snapped right back up today into where we are closing here today at the we're roughly 46.19 as we sit here today. So again, even though we had that nice breakout, you could see that we snapped right back up to 46.33. That may mean that we have additional choppy conditions going on. One more thing I want to show you. This is the RTH session on your 15-minute chart. And so what I want you to pay particular attention to, and this is really easy to see, is this is a day, this is yesterday, this is the day before, this is the day before that. This was a bit more action on this day. But you can see that the ranges have been very narrow. And again, this was the first day that we actually had some trend and breakout on a trading day. So again, there's a real possibility that tomorrow we could end up being choppy again as we make this breakout and up here again. There is that possibility. Now, if you are measuring, and let's take a measurement here. Hang on just a second. Okay. So let's take a Fibonacci measurement here. We'll come over here to our Fib tools. And let's grab this most recent swing high, and we'll drag it down to the low. So what I would be looking for tomorrow is a potential push up to 46.40. You grab this swing high and come down to here. You could be looking a little higher than that. And this is your 15-minute RTH session up to as high as 47.03. So those will be some levels that we'll be looking for. These are our 70.5 retracement levels that we watch for on a daily basis. So 46, 43 up here, and 47.03 will be some levels that we'll be watching for tomorrow. So let's talk about the actual trade that we got into here today. Again, we thought the day was going to start out being a little bit challenging for us. If you take a look here at the 1-minute chart early in the session around 8 a.m., I ended up getting in. Let's see, I ended up getting in right here. My first trade of the day was right here at the 65 level. And I got in here because that was at the open, and that was a break out of the center point support area. So we had a number of attempts down into the support area. We couldn't get through. I got long on a break of this area. Actually, I was looking to get in long at 67. It went up to 69. My stop was 57, and it came right down to the tick and took me out. We then watched the market rotate through, and I ended up taking a long, and this is one of the trades that I got into today. Ended up taking a long up into, I believe I waited for it to get above 44.01, and as the market did, that's where we had this dynamic trigger move to the top side. So one of the things that I was looking for is we had a lot of volume parked at 44.00. I was looking at a breakout trade, and this is your volume bar here. We were looking at this breakout trade of 44.01. We had some volume leading into 43.93. We came up here to 98, and then the volume bar, you see clearly that the volume broke out. And that is where we started one of our nice long runs on a winning trade today. Also, one thing you can notice here is that we danced around the 200 period moving average here. This is your 15-minute chart. And again, it's really easy to see all of the choppy sideways conditions that we've had to deal with. It's over the last couple of days. We had this little bit of a move down, but really yesterday was really just choppy. Once we broke through the 200 period moving average, it was just a straight shot all the way up to our target number 2 up here at the 46.07, and we're at 46.18 here at the close. So again, it was a very good day here at the Oil Trading Group. It was nice to get back into the big moving days, and hopefully we'll have more of the same. So as always, I want to say thank you for spending time watching the videos here today at the Oil Trading Group, and until tomorrow, I want to wish you good luck and good trading.